Let's compare Apple versus natural gas. Now, you might ask yourself, why in the world would anyone compare Apple to natural gas? Well, it has a lot to do with basically opposite price action. Apple, basically bearish, putting in lower highs, whereas in the process of it, natural gas, the exact opposite. So let's have a look at it. Now, the reason we're doing this exercise is because markets change in cycles, secularity, structural reasons, even some seasonality. And so sometimes things go up and sometimes other things go down. And of course, we want to be allocated where there is bullish trends, if we're bullish, or if we want to be short, we want to be where things go down. So Apple here, for example, is actually, as I'm recording this right now, about to break essentially a very simple support line here that I drew in from April of last year. This is not any support line. This is actually an arch that this stock has been trading in for the most part since April of last year. And this is probably not of any of meaningful insignificance. In fact, even if we were to bounce from here, the odds of starting to make a lower high is actually quite high given the broader market structure. Now, let's have a look at natural gas because it's giving us the exact opposite of that. So I'm going to move the Apple chart up so we can look at natural gas a bit more. I'm just looking at the UNG ETF. And actually, by the way, you can see, and this is not because they're inversely correlated necessarily, although they kind of looks like they are. But you can see Apple, again, putting in this top and natural gas essentially putting in what to me it looks like a serious bottom. So again, let's move the Apple chart out of the way and take a look at this a bit more closely. In fact, let me just make a separate chart entirely just with UNG to show this in the best possible manner. And essentially, this is what we're looking at, right? Now, on the weekly chart, it looks even more enticing. This is something that is breaking out of resistance lines. It is making a series of higher lows as opposed to lower highs in Apple. So all else being equal, and it happens to, at the moment, and according to our analysis, also fit into the broader market structure, this is something that I would prefer to be long in as opposed to short. And Apple, maybe there might be a reason to start trimming some. But again, natural gas versus Apple, this is the kind of thing that professional asset allocators look at. They look at through the lens of multiple layers of analysis, but they really want to see what's making lower highs. Essentially, if you want to be technical about it, what's making higher lows, and of course, look for the reasons behind it. Apple versus natural gas. Hope it helps. See you in the next video.